Okay, hello again, good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 19th of July 2019, so welcome everyone. Welcome to this Friday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, just a quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our videos that are coming out. So, and also our JFD research page on our website. Feel free to check us out here as well in order not to miss any of the important analysis that we do on a daily basis. So I do apologize, guys, my voice is going down a little bit. So basically, check us out here. I believe you can find a lot of useful stuff. But for now, let's jump into the charts. Now, the first one I want to touch on here is Nikkei. So the Nikkei index, so having a nice, fantastic boost. I mean, it closed already, and it closed well in the positive territory for today. But of course, not to mention that, I mean, it was kind of on decline here. We were looking at this rising wedge formation, which the index managed to break to the downside on Tuesday, and you can see it kind of drifted further down. This is what I was talking about. And when I was covering Nikkei, I was telling you guys to keep a close eye on this 21,480 zone, 490, because a nice good break below this could open the path towards some lower levels. And look at this perfect test of the this target that I had around the 21,035 zone, something like that. The index even dropped a little bit lower here, managed to push below the psychological 21,000, and then kind of still rebounded and pushed back up. So it traveled back up, but again, only up until this level that I've talked about previously, the 21,490. So it kind of closed slightly below this. So what we're going to do here is, of course, going into next week, we're going to keep an eye on this level. We'll see, of course, how the U.S. equity markets are going to do. This spike higher came after yesterday's comments by the New York Fed president that the Fed is cementing the chances for a rate cut this month. So I mean, that's why it kind of forced a lot of investors to jump into more riskier assets like stocks, and this kind of made and gave a nice push to the indices. And we're looking at other cash indices right now. They are slightly on the upper side. Still, that said, we are still in the negative zone for the week, and as you can see by Nikkei here, I mean, it kind of tried to push, make its way higher, but still kind of closed the week in the negative zone, and to be honest, outside of this rising wedge formation. So in a way, that's why, guys, for going into next week, looking at Nikkei, keep your eyes on some of these key resistance levels. Especially this 21,490 zone. If it struggles to push above this, then we could see something like this happening. For us to start aiming for higher levels, ideally we would like to see a push above the 21,785 before kind of aiming for further upside. So that's why, guys, for now, keep your eyes on some of these levels, and let's see how this is going to play out. Jumping into silver. Now, I've talked about silver yesterday in my Traders Tea Time, and basically what I was saying that yes, we are having a fantastic run here in silver, but if trying to find a spot here where the commodity could kind of find resistance and then retrace, or let's say finding a potential target for a retracement. Now initially what I was saying that we could draw Fibonacci here. The only thing is that we need to wait and see where exactly will this turning point happen, because yesterday it at one point it looked like it could have been here, but you can see that it continued to accelerate, and this is what I've also mentioned and kind of made it quite clear, that we still need to find that good area of resistance before we could draw something like this basically here. So for now, basically, we're still keeping a close eye on this. I mean, yes, it made its way higher again. It's currently slowing down, but the only thing is that, well, it was doing actually the same thing yesterday here, so it was slowing down as well. So that's why for now we're still kind of watching this one. We're not kind of really saying that this is where it could turn around. The only thing is that we do have a nice good area of resistance here around the 16.49 zone. And just to show you what that level was, we need to kind of scroll back here a little bit, and that was basically the high here. It's the high near the 22nd of June 2018. So this is the level where the commodity was in June of last year. So quite a big run, you can see by the move here. So still trading above this upside support line, which is a good thing here for the buyers and for the bulls. But for now, like I said, if this commodity finds good resistance near this level, near this 1649 zone, then in a way we could keep an eye on a potential retracement here, maybe initially of course targeting only the 23.6%, and then we'll take it from there, see if it actually wants to travel further down or not. If it doesn't, then we could see another leg of buying and potentially maybe overcoming this kind of high from which we will aim for resistance. So that's why for now, guys, be very careful with this one. Keep an eye on it. Don't kind of rush into this yet. Let's wait for that confirmation kind of reversal. At the moment, looking at this picture currently, I mean, we can see that there is a doji that formed. I mean, we could see maybe this one sliding back down. The only thing is that what you could do for today is keep an eye on this little low here, this little area right there, and let me just quickly put this one inside there. Yep. And basically the low of this 4-hour candle, a drop below this in a way could kind of trigger this further decline, and this is, like I said, this is where we could aim for our 23.6% retracement. Gold. Now gold is on fire as well. I've talked about gold this week, in the beginning of this week actually, and I was telling you guys to keep a close eye on this potential veg formation here, that could also be something like a pennant, and basically we did get our nice push to the upside here. We managed to get a nice break here, and it traveled higher. It traveled above this 1425 level, and also broke the 1439.40 zone. So this is quite important because, as you can see, it's currently getting held here. This area between the 1439 and 40 is acting as a good area of support. So let's see if it actually can continue doing that, and if it does, then we may see another push higher. Initially we will target the R1, today's R1, which is around the 1458, and then we'll take it from there, see what it wants to do. I mean, if it wants to travel further up, that's great, but still we have a fantastic level here near the 1488 zone, and that level, well, I need to jump into a daily chart just to show you. There we go, scrolling back a little bit. So this 1488 was a nice area of resistance here back in May 2013. So this is how far we have gone already on gold. We're testing these levels. So this is basically the highest point of May. So keep your of 2013, of course. So that's why keep an eye on it, guys. And let's see what it wants to do with the 1439.40 zone. If it wants to drop below this, then well, we could consider a slide here. And initially, what we're going to do here is we're going to target this little area of potential support near the 1430 zone. zone, something like that, and then yep, we'll take it from there, see what he wants to do after. But if it suddenly drops back inside this veg formation, then well, it's not looking good for gold. But for now, the downside is slightly off the table, guys. Jumping into a few pairs very quickly here. So USDCAD, just a quick mentioning of this one. I talked about this about this pair this week, and basically I was telling you guys to keep a close eye on some of these levels, and it did travel higher, but it kind of failed to push above. Again, it failed to push above the 1.3095 level, from which it reversed and traveled to the downside. But again, it failed to push below the 1.3020 zone. So this area kind of is playing out nicely, is playing out as a nice good area of support. The only thing is that looking at from today's perspective at this pair, you can see that it currently is struggling to push even above its pivot. So this kind of creates this a bit of a bearish indication here. But in order, let's say, to aim for lower levels, ideally we would like to see another drop below the 1.3020 zone, and only then we'll initially, of course, aim for the psychological 130, which is near its S1 today, or even going further a little bit towards the 1.2970, or around here the S2, which is around the 78 zone. So good potential targets here. Again, before aiming for lower levels, we need to see that confirmation break below the 1.3020. If it decides to push back up here, still for us the upside, in order to aim for slightly higher levels, or as I've mentioned previously in one of my videos, this downside resistance line, we need to see at least a good push above the 1.3095, and only then we'll aim for higher. GBPCHF, GBP in general, the pound had a fantastic day yesterday, finally, and basically, like, as you can see, this is when I was covering this one last time. So after we had our little break here below the 1.2343 zone, something like that, it traveled all the way down here. It managed to almost reach our target here. Let me just get rid of this arrow. Almost managed to reach our target near the 1.2220, but it failed to do that, and it reached the area just slightly above that near the 1.2240. So for now, what we're going to do here is, of course, we're going to continue monitoring that. Sorry, it wasn't a 40, it was a 35, so that's just more precise. We're going to keep an eye on this one. We're going to keep an eye on this level, but the only thing is that the more important level for us today is this one right here, the 1.2343. You can see that the pair is struggling currently to push above it. If we see a nice good push above it, then yes, that's great. We could see further moves higher. Yesterday, just to mention as well, that yesterday the pair accelerated initially on the news that Michel Barnier came out with a statement that they're willing to look into the issue regarding the Irish backstop. Then the Irish Prime Minister also supported this idea. Then the UK retail sales came out much better than expected, and all this kind of added up and gave a nice boost here for the pound. The only thing is that still worries remain regarding Brexit, because even though everybody was coming out with positive news yesterday, still the issues around Brexit and the backstop, the Irish backstop, still every side has their own demands. So I mean, if they've previously couldn't agree, it's doubtful that they could agree on something new again. So that's why, guys, be very careful with the pound and with this up move. If it pushes above here, above the 1.2343, yep, we could consider higher levels again. But if it struggles to make its way higher, then we could see another leg of selling. The only thing is that now we're going to take a more cautious approach here on the downside and wait until we see a drop below this 1.2235 zone, and then we'll aim for lower levels. Euro dollar also had a nice good boost. It managed to rebound again from this upside support line, and this is what I was kept talking about for this whole week, basically, to watch out for this upside support line, and it continues to hold nicely. So that's a good sign here for the bulls. Of course, it is again struggling to push above this 1.1275 level. Now I talked about this one, and basically, to be honest, now you can see that it keeps overshooting it, so we can actually, just for the sake of it, we can actually raise this one a little bit towards the let me just quickly adjust this, guys. So this, we're raising it towards the 1280 zone. I do understand it's only 5 pips, but just for that kind of peace of mind here, this is where we're going to be targeting, because this 1275.80 zone kind of continues to hold the pair down, and you can see that this is what I was talking about yesterday in my video. The 1.1244 level, if we see a nice good push above it, this is going to be our little neutral territory. We're not going to say that this could travel further up here. We need to see that nice good break above the 1.1275.80 zone before kind of aiming further up here. So for now, just continue observing that. If this decides to drop back down again and drops below the 1.1244 area, well, I mean, this could be opening the path again towards this upside support line, and then of course we'll take it from there, see if it wants to break it. If it doesn't, then we could see this one kind of balancing around here a little bit for quite a while, until it finally decides where it wants to exit to. So that's why, guys, for now, keep your eyes on some of these levels for today. Let's see how this is going to play out. EURGBP, the last one here for today, for this morning's session. Okay, fantastic movement yesterday to the downside. A great move and a great break here of this upside support line. The only thing is, you can see that the pair is now trying to push back above it. So in a way, to be honest, this upside line becomes less significant unless we start looking at something like this here. But to be honest, we're now trying to find good areas of support here. In a way, I would say we're trying to justify here. I'm trying to justify here something. So in a way, you could look at this one, you could keep an eye on it, but it's a very tentative one, and that's why do not focus on it too much. That's why we do have some levels here, some potential breakout levels that we're keeping a close eye on. So in order to aim for much lower areas, ideally a drop below the 0.8955 level, that's what we would like to see, and then yep, we'll aim for lower areas. If this pushes back above the 0.90 level, now again, this may kind of raise concerns in the bear block, and we could see maybe the bulls joining in here again and pushing this one higher again, maybe leading back towards these yesterday's highs. But for now, again guys, it's very tricky at this point, because on one hand it is below its psychological 0.90 level right now, but on the other hand, it's still kind of far from this potential breakout point here to the downside of 0.8955. So that's why, from the very short-term perspective for today, keep your eyes on the psychological 0.90 level. We may see this one actually traveling a little bit higher here, maybe testing this level here, and then reversing maybe and pushing back down. So but still, like I said, we will aim for lower levels if we see a drop below the 0.8955. Also, what you could do here just for today is to keep an eye on these lows. If we see a drop below these recent lows here, then yep, we will aim for this 0.8955 level. So this level here is just only about 15 pips higher. I do understand it's not much, but still, like I said, with this one, you need to be very careful, as it could move either way. Yep, for today, like I said, keep your eyes on this one, and let's see where the weekly candle is going to end, because that's the most important. Because you can see, after kind of managing to make its way higher and create a new high here, the bears quickly kind of pushed it back down, and now the body of this weekly candle is very small and with a huge tail. So that's kind of technically speaking. So that's why, guys, it's going to be very interesting to see how this weekly candle is going to close and where this is going to end the week. And if it suddenly, let's say, closes in the negative territory, maybe this could make those bulls a little those bears a little bit more happy next week. So that's why keep your eyes on this one. It's a very interesting pair. Let's see how this is going to play out. Okay guys, I hope you found it useful. Thank you very much for sticking around and watching until the end. If you want to join me later on at my trader's tea time, we'll have a look at some of these pairs, instruments. We'll see how they got along. Also, if you want to, after this video is uploaded, you want to leave a comment in the box below. Let's say if you want me to cover a specific instrument for the next video, I will be happy to do that, guys. And yep, I'll see you later. Bye bye.